Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. All right, lots to talk about today. We had the Fed come out with their 75 basis rate hike. We heard from Jerome Powell. We heard what his thoughts are about recession. But first, we're going to talk about Ford and GM versus Tesla. The numbers are officially out. Let's compare, let's contrast, and let's see what the numbers really tell us rather than always listening to all this BS FUD out there from media, from article, from Mary Barra, from Farley, from even Elon. Let's ignore all the noise. Let's let the numbers do the talking. So let's take a look at that. So I'm going to go ahead and share my screen. Let's share this now. Okay, so here we go. First thing we can see is on the far left. Let me explain to you what I did here. I try to make it as simple as possible so everybody could follow along. So first thing we see here on left, GM, Ford, and Tesla. We got vehicles sold by millions. Okay, so this is all in millions. A revenue in billions and a net income in billions. GM delivered 1,422,000 vehicles in Q2. Ford delivered 1,032,000 vehicles in Q2. And Tesla only delivered 254,000. Now, with all of these automakers, we can say that there are issues with supply chains, lockdowns, especially for Tesla, right? I mean, you could honestly argue that Tesla had it the hardest since their main factory was shut down for essentially 2/3 of the quarter. But we're not going to use that. No excuses. We'll just say everybody had headwinds. So, fair playing field. Revenue. GM, 35 billion, almost 36 billion in revenue. Ford takes the lead on this one. $40 billion. What a beast of a number. And Tesla, almost 17 billion. Okay. Now, the thing that really matters, net income. What is net income? Well, net income is the number that really matters at the end of the day. Let me say it another way. It's as if, let's say your salary was, say, $100,000 a year. Well, you're not really making $100,000, right? You're probably really taking home anywhere from $65,000 to $70,000, depending on your tax rate, your deductibles, and all that. So net income is kind of the same thing. Net income is essentially what's left over after all of your operational expenses, right? All the things to make the vehicle, etc. All right. So what are we left with then? So we brought in a revenue of $35 billion with GM on 1.4 million vehicles sold. But by the time everything was said and done, all the costs were assumed for, they walked away with only 1.69 billion in net income. Okay, what about Ford? Well, although they might have won on the revenue number, they're not winning on the net income. This is kind of an opposite story compared to GM. So they sold about 1 million vehicles. They had about 40 billion in revenue, but they only made about $700 million. So yes, this is a B here. And notice there's no comma here. So this is $700 million. And actually, I'm rounding up for this. It's actually in the 600s. So take that, for what you will. Okay, then we get Tesla. They only had 254,000 vehicles delivered in Q2, right? They didn't make it to the million mark like Ford and GM. They only had about almost, we'll give it to them, so just say 17 billion in revenue, essentially less than half of what GM or Ford had, right? If you doubled this, you're essentially at 34, and again, with a little, rounding up, you'd be at 34, right? 34, or I guess that'd be 17. So, okay, yeah. So you'd be at 34 billion, whereas GM's 35 and that's 40. Yet Tesla walks away with $2.3 billion in net income. What a beast of a showing. Okay, now let's really extrapolate this out because it's clear. This is 2 quarters in a row. Tesla is the most profitable, the most efficient U.S. automaker there is, bar none. They're the most American-made vehicle. They're the best when it comes to electric. They're the most efficient. They just do everything better. The numbers don't lie, okay? I don't need Elon to say this. I don't need to hear about Mary Barra and what the future's going to hold. I don't need to hear anything about Jim Farley and, lighting up a homeless shelter with, nuns who are deaf and blind. I don't need to hear about any of that, right? I don't care what your lightning can do. I don't care what your future promise is, Mary Barra. Elon Musk, he's got his head down. He's working. The team's working. Tesla's working. And they're doing the right things. And the numbers show it. So let's see if we can make this even more drastic. I'm going to hide myself here. I don't want to make the same mistakes of the past, trying to be less wrong. Okay, so I'm going to go ahead and try and hide myself here. Let me just do this real quick. Okay, now I'm gone. And what I'm going to do is I'm going to show you something here. So this is the exercise. What happens if we combine the power, the might of a Ford Tough and a GM led by Mary Barra versus a little old Tesla, just Elon Musk, a lonely, nerdy engineer? Well, together, GM and Ford come out with essentially 5 million vehicles in one quarter. Tesla doesn't change. It's 254,000 vehicles. That's essentially 10x more than what Tesla did. Revenue, a monstrous, just call it $76 billion for GM and Ford combined. Tesla still sitting there at $17 billion. However, net income, again, essentially your take-home pay, $2.3 billion, $2.39 billion for GM plus Ford. Tesla, $2.3 billion. Next quarter, I will predict, you're hearing it here first, Tesla will outdo GM and Ford combined. And I don't even think it'll be close. I think it'll be a good margin of room between GM and Ford combined against Tesla. This is what we've been talking about. It's happening. The numbers don't lie. Now, we'll hear about whatever spin Jim Farley has today. We'll hear about Mary Barra. I'm going to go ahead and start bringing myself back in here. And I'll actually stop sharing too. We already heard from Mary Barra. We've heard from Jim Farley and some of the spin already coming out. We heard Jim Farley the day Tesla came out with their earnings, which, what do you expect? Talking about how they have the battery material secured, and they have line of sight till 2025, I think it was. And Mary Barra had the same thing in her Q2 report, essentially saying they have all the supply chains locked up to deliver 1 million vehicles in North America by 2025, and somehow that's going to pass Tesla. Don't know how that math works out. And so we'll see what the spin is, but you know what you can't spin? You can't spin these numbers. These numbers don't lie. So shout out to Tesla once again. Even on a quarterly day of quarterly earnings that should be focused on Ford or even on GM, we still come away talking about Tesla and just the power, the sheer economics of this juggernaut of a company. You know why? They're not an automotive company. That's why. They're a technology company. The sooner you realize that, the sooner you'll be on the right side of this investment. In my opinion, not financial advice. All right, let's talk about what happened just a couple hours ago. All right, so Jerome Powell came out. They went ahead. They hiked exactly what we expected, 75 basis point. Right, so in other words, 0.75, or you can consider 3/4 of a point, right? So a point would just be a percentage, 1%. So when I say basis point, 100 basis point is the equivalent of 1%. 75 basis point is a 0.75%. Hopefully you follow that. Anyways, just want to make sure that we're all on the same page. Now, what Jerome Powell said is what really matters. So first of all, he acknowledged that he sees weakening in the economy, right? He sees slowdown. He can see what's happening. So he acknowledged that, which is great. And in my opinion, he sounded almost a little dovish during his talk. However, what was very interesting, most telling for me, is the fact that he said that he does not believe we are in a recession. How interesting. Now, why is that so interesting? Why is that so important? Well, because the Fed has a certain mandate, and the mandate is to keep inflation under control, right? To keep prices stable for everybody. And of course, as inflation goes higher, it affects people like you and me, but in reality, it hurts the most for people who, make less, right? The people who aren't as fortunate, or the people who are, living paycheck to paycheck. So, you have to have some empathy and sympathy for these people. However, Jerome Powell, the only way he can help this and help those people is, ironically enough, potentially hurting them by trying to destroy demand. And when you destroy demand, you slow down the economy. When you slow down the economy, you kind of affect the job market, the labor market. So while we have a strong labor market right now, it may not stay as strong moving forward, because a lot of the things that we've seen Jerome Powell do so far, all these rate hikes, well, they may not have even taken an effect yet, right? Sure, the stock market reacts immediately like that, right? But the results of these interest rate hikes might take some time. So why would Jerome Powell deny that he thinks we're in a recession despite whatever happens tomorrow? Well, let's be honest. if we are in a recession, historically, the Fed would stop raising rates because they know that they are destroying demand and they are sending us into a recession. If Jerome Powell denies that even if we get negative GDP tomorrow, well, then he can continue to raise rates until he gets to his neutral level, which is about 3.25% and 3.5%, right? So it would give him justification to continue because we're not in a recession. So we'll see how this plays out. Tomorrow will be very interesting to see what the actual GDP number is. I believe that if it's negative, I think that means that we'll see the stock market rally. Again, we're in that kind of cycle where bad news is good news. So keep an eye out for that. Don't make any investment decisions based on what I just said, not financial advice. I'm an engineer. I'm just giving you my opinion. Now, with regards to what else he said, okay, so he did say that, we're going to have rate hikes in September, but I think he pivoted today. I think today we saw the Fed pivot. What do I mean? What's that pivot? Well, historically, when the Fed pivots, that is when we see a bottom in the market. Why do I think the Fed pivot? Because Jerome Powell said, now he thinks they're at a place where moving forward, he doesn't want to guide on what the next rate hike will be. It's really going to be dependent on the data, and it's going to be each meeting by meeting. So why is that pivot? Well, because in the past, he's been guiding about what the next one would be, right? Before we had the first 75-point rate hike, it was going to be 50. They bumped up to 75. And then we got it for the 25. We got it for the 50, right? So the Fed tries to keep us somewhat in the know, right? We even saw the Wall Street Journal leak before this last 75, or I guess not this one, but the one before that. We saw that leak come out, so the market would know. So now that he doesn't want to tell us ahead of time, that tells me that he's pivoting. So if the numbers start to come down, if it seems like we've hit peak inflation, which we may have, because remember, oil has been under $100 a barrel pretty much for all of July. So we haven't seen the reflection of that within CPI. Now, the Fed doesn't really care about CPI as much as they care about the PCE, pricing consumer expenditure. These acronyms, I forget what they are. But the point is, if we start to see CPI come down, we already see core CPI coming down. So X fuel, X food, we already see that coming down. If we can see the PCE price, I'm pretty sure it's the PCE start coming down as well, especially into this next period, because this next period, the Fed's on vacation. They essentially are going to skip a month. There's no meeting in August, next meeting in September. So in September, they'll make a decision. Now, it's my estimation that they'll either do one more 75 or they'll cut down to 50, depending on what we see for those numbers in the next 2 months, right? So again, August and September. So we'll have to keep an eye out for that. But we are potentially today, or I guess a month ago, really, when I kind of was talking about this, we might have actually bottomed, but don't get faked out. Don't trust it too much. Think about the long term. We're all here about the long term. That's what this channel is all about. So if you're thinking about the long term, then this may be a point where you want to get back in the market. It may not. You have to make the right decisions for yourself, your family, your budget, your expenses, how much debt you have, right? All that plays into it. I don't know all of your details. However, I can tell you that I have been slowly buying, right? And I'll probably buy more right after a Tesla stock split. So that's going to be pretty exciting to go to the shareholder meeting. I'm excited about that. That's coming up. That's really the next catalyst. Tomorrow is the last real day of any kind of interesting things happening until the shareholder meeting. Tomorrow we'll find out about GDP. Probably going to be negative, probably good for the markets. And then we go to the shareholder meeting. Now, speaking of that, I'm going to be at the shareholder meeting. If you're there, it's going to be easy to find me. I know people tend to look a little differently than what you see on camera here. And then you see them in real life. You're like, oh, you look a little different than I thought, right? Sadly, yes, this gets a lot uglier. Sorry about that. But I'll be wearing this shirt, my Fremont, Shanghai, Austin, Berlin. I've also had some people ask me or tell me that this is backwards to Austin and Berlin. We've tried to change it. It's been pending for a while, so it's got to get approved before we make changes. So I'm trying to be less wrong with things like that, but there's only so much I can do when it's in other people's hands. So I think there's one other thing I want to talk about. Let me just take a look at this. Okay. So the other day I mentioned something regarding FSD 10.12.2. I think that's the version we're on. I mentioned them deprecating some of the heuristics, the C and C++ coding, and even the legacy neural nets. And somebody in the comments had mentioned that they think I'm using deprecated incorrectly. So fair enough. I hear you on that. But check this out. I just want to show this to you. It might be over here. So in the software world, we actually use the word deprecated to mean something that's essentially going end of life. So as you can see here, what does deprecated mean? Deprecated refers to a software or programming language feature that is tolerated or supported but not recommended. A deprecated attribute or feature is one that may eventually be phased out but continues to be used in the meantime. So again, that's what Tesla's doing. They're deprecating the legacy neural nets. They're deprecating the heuristics. They're deprecating the C and C++. Anyways, I just want to bring that up because if some of you are thinking like, oh, what's he talking about? I understand what being self-deprecating means, but in the software world, I think in many worlds, right, people use the word deprecating to essentially talk about something that's being phased out or not used or just old tech. All right, so just want to clear that up. Hopefully, if you didn't know that, now you know it, and if you didn't know that, well, hopefully you had a giggle. All right, we're gonna leave it there. Do me a favor, enjoy this type of content, hit the like button, hit the subscribe button, ring that bell. I love you all. Peace.